All right, thanks, guys. Let me go ahead and introduce Max Lee with no further ado. He's the director at Bank of America Securities. He leads the Commodity and Foreign Exchange Systematic Strategy team. After graduating from Rice with a BA in mathematical econ. He got an MStat with me, and then he joined Merrill Lynch Commodities in Greenway Plaza, where I believe he was today, with the focus on low frequency alpha generation. Since then, he has gotten a master's in information data science at Berkeley last year, and he's a CFA charter holder and a level 2 candidate for both the certified market technician and the CIPM designation. He has passed the industry tests, the Finance Industry of America, which it used to be from the future side but anyway, it's a FINRA Series 7 and Series 63, which makes him able to talk about securities. And it also means he is very good at securities law in in New York. I guess it's New York, or where is it, Max?
It is New York, but I have it for Texas and London as well. I'm here somewhere.
Okay. And he's going to talk about roles in finance and drilling down to what happens in his shops and the difference between fixed income commodities and currencies versus stocks. Those are officially known as equities. And what are the opportunities? And he'll be talking about some internship deadlines and be introducing 2 guest speakers that are going to also be looking for talent. So Max, let me just turn it over to you. You should be able to share your screen, or do you want me to pull up your presentation?
No, let me go ahead and give it a shot. It's been a while since we used Zoom. Let me see if I can share this. Okay, can everyone see? I'll try and move through.
Coming in loud and clear.
Okay, great. So, like Dr. Dolman did a great job of pretty much just introducing me. Done pretty much the same thing since I graduated. I did my undergrad and my MStat kind of like in the normal 4-year period through 2015. And then I joined as an analyst in sort of commodity index trading, like you mentioned. And since then, with definitely some luck, now I run the desk globally. Was one of the youngest directors for B of A in a while. So the whole point of that is not really to just be a self-made, but it's more that hopefully, there's some things that picked up along the way, and I think we have a decent understanding of kind of like the industry in general. That hopefully, I'd love to sort of bring back to Rice. Since I moved to New York and we've done this, rounds and rounds of intern hires, professional hires, I was actually been very surprised that I feel like Rice, for sort of the national notoriety has as a strong institution, is generally underrepresented in finance, especially in the Northeast. And, past oil and some, power and energy trading here, the reality is that a lot of the opportunities still are, in New York, in Chicago, London, Shanghai, Singapore, past the US. So, getting hopefully a little bit more of an awareness of kind of like the main sides of the street and some of the more global firms, was sort of a goal. And like Dr. Lowenman said as well, sort of moving past equities, which I think is honestly a very heavy component of literature. And what you see in TV, and so getting a better understanding of the other markets out there, I think is extremely helpful. So just as a little bit of like what my team does, so pretty much we are a very niche side of like what people generally think of sell-side trading desks. We kind of operate as like a mini hedge fund where we work on client-facing strategies and sell them swaps on sort of systematic trading, fully transparent rules. I think the idea and sort of the background behind this desk and sort of this business came out of 2008 when people were looking for alternatives to hedge funds, that they were a little upset with paying 2 and 20 for non-transparent, non-replicatable risk. And then obviously as that eroded over the years, banks especially have sort of stepped up to provide, an investable framework across all assets that is rules based. It's fairly cheap, um, and I think overall it's just a more attractive vehicle for especially the less sophisticated part of the buy side. So like thinking about your pensions and your endowments. So we cover effectively linear and nonlinear strategies for about 36 futures markets across all points on the curve, primarily focused in commodities. And then in the last 4 years, we've also lifted the sort of FX systematic strategy portion, which is traded OTC on 30 pairs versus the dollar. So that's your G10, your EM. So that's kind of like the franchise role. Then the trading team in specific that I manage is also fully responsible for like a very large actually risk budget, in which they are responsible for sort of researching and coming up with their own alpha and sort of their own value add. And this is maybe actually an interesting portion to sort of go into Volcker, because I think this particular group may not have had as much experience, but a lot of the people that I've talked to are always concerned about, Volcker came out of 2008 and effectively limits at the headline sort of prop trading at a bank. That is a sort of like a Main Street kind of interpretation, and is not in reality true. What Volcker is there to do is to limit the amount of exposure that a bank can take to be sort of in economic proportion to the client business. So the idea being that on the sell side, you are there to be a client-facing business, but that doesn't mean that you can't take risk. And if you think about, if you think about the traditional market-making activities where some hedge fund A wants to go buy, some shares of Apple or something, let's say from the Delta One equities desk. Anytime you make a market, that's already inherently risk taking, right? No matter if you can get out and hedge perfectly. So I think that's something that's been a little misconstrued in sort of mainstream media, but the reality is that you do get a lot of benefits, and you still, on some desks, and ours in particular, can do a lot of still pushing that risk mandate, and looking at generating your own alpha, thinking about how you as the trader or portfolio manager can add value. And it's actually a very interesting time, and I think I'll let some of the guest speakers sort of go into it a bit more. But it is a very interesting time to kind of be in the sell side versus the buy side, because honestly, you're seeing a very large fee compression in the buy side, as performance doesn't necessarily meet kind of like what was asked from them in terms of compensation. And simultaneously on the sell side, you're getting probably the largest lift now in sort of salaries, as it relates, mostly as a function of iBanking, which bleeds into markets. And then the reality is that if you're good at what you do, the difference in variable compensation is honestly not that different from a bonus structure. So that's my plug for banks, even though, I've been at one for a while. There's pros and cons to both, but I do think that it is an interesting time to be both, and you shouldn't just get necessarily caught up in, again, some of like what you see in the in media and in TV shows and movies. But anyway, so that's kind of a bit about my team. Where I think it makes us an interesting sort of person to be able to speak about this is that we only service institutional investors. We are the counterparts to effectively the BlackRocks, AQRs, all the way through Harvard endowments, Texas teachers endowments are some of our clients. And so there's honestly, we sit kind of at a really good point to sort of speak about the institutional side, the trading side, and then there's also a little bit, as this course will go into a little bit on, a little bit more of like the systematic and the data-driven portion. Our entire team is code proficient, and most of them have higher degrees in some quantitative field. So it is kind of like a relevant desk structure to kind of like what maybe some of the people here would be looking to join. So hopefully there's some nuggets of wisdom there. So just to go through the schedule a bit more. So there's about, I think 6 or 7, I have to check with Dr. Dolan lectures. Like you mentioned, I'm actually based in New York, but I will be flying back and will be available, in person for all of these, and can answer any questions, and love to meet up or go over things with anyone that wants to. So today, obviously just getting back into the swing of school, some introductions. But I think we're going to touch a bit about sort of like the opportunities, which everyone said that they're kind of interested in, and sort of like the market structure. Michael Stover and his colleagues that I've actually known for now a couple of years. But they're the head of one of America's for one of the larger sort of quant trading and sort of placements from headhunter side. And so, I'm hoping that they can sort of give a little bit more color into what they're seeing and how, the industry is kind of shifting a bit in terms of like what skill sets are needed, where the asks are. And I think that's, hopefully super relevant to you guys as potential candidates that are looking to start working in finance. As we go through that, I think we're going to get a little bit more into some of the industry, sorry, the actual market side. So we're going to go over systematic trading as an form of like factor investing next week, which is kind of like the baseline of where you kind of get into the field. So Kranti Gade is one of my colleagues who runs the global head of structuring from the investable index world. We'll sort of talk about like what goes into a strategy, how this sort of field has evolved, how people are doing research. And I think it's actually a really interesting idea because it's very easy to convince yourself with your own sort of self-confirmation bias of what is a good idea. But so his whole role is to effectively convince other people to buy things that, those teams have made. And that's actually a very different problem set, especially if you think about how, segmented various portions of the buy side are. And so to convince someone to buy into, your mathematical process is actually a really interesting challenge. And so, he's very well, arguably one of the best people on the street to be able to comment on that. So we'll go over that. Then we're going to do commodities and FX again. I think there's a great portion or sort of like a great opportunity to not talk about equities. If you think that the equity market is, I don't really know the number. I think it's like 100 and call it $70 trillion worth of market cap across the world, right? Just on its own, the FX market trades usually around 6 to 7 trillion per day. Commodities on their own, maybe another couple billion. Credit, fixed income, these are all things where there's a lot of sort of opportunity and definitely more structural inefficiencies. G10 FX aside, where I think it's definitely a better place to start your career. And honestly, some of the more interesting things that are being developed are not in the equity space, right? I mean, at the end of the day, a share is a share. And that's not going to change that much. I mean, you can try and wrap derivatives, you can do VAR swaps, you can do all these things around it. But if you think about where some of the more innovative products, if you like crypto, if you want to trade weather futures, like those are all things that are not as time tested and are looking for, talent to kind of fill the void. So, we're going to go over the commodities markets a little bit holistically, as well as the FX markets on individual weeks. And in the middle there, we're going to have a couple of people on the buy side, because I think it's actually, I can speak about it from the sell side perspective, but from the buy side, you really are what you eat, what you kill. You eat what you eat. Yeah. And it is just interesting to know, there are different considerations. Costs are a much bigger portion at the buy side. You really have to care about, every dollar and every penny. And I think loss management, which is actually really what ends up deciding who makes a good, trader, portfolio manager at the end of the day, is actually probably the most valuable skill. Because I know people that are, have the backgrounds of some of the people here that are extremely bright and, very quantitative, and they do a great job. And then I also know people that get out of bed on the day and they're like, oh, it's cloudy, so crude is going to go down. And they've also had good careers, but learning how to manage sort of that loss feeling, I think, is really, and staying emotionally detached and being able to follow through with what your system says is the hardest skill. And I think that's most evidence on the buy side, where the salaries are lower, the variable comp is higher. So some of those, McCool and Thompson, are going to sort of give a little bit about their their experience on it, and hopefully that helps provide a little information. So, kind of the course in a nutshell, I think there's another day there that we can sort of go over things, but, to everyone that was worried, this is not, I talked to Dr. Dobelman, this particular semester, we're going to try and not be the most quantitative. And I think instead spend a little bit more time on like a little more of an overview of things that may not get as much attention, or that like sort of the class may not necessarily be as aware of. So that's kind of the schedule. So I would like to go. We had some other material about the industry, but I know that now it's already 11:30, so I don't know if Michael has joined.
I see Michael is on,
Okay,
Max.
so let me. Maybe I can. This will we can go over that at a different time. Anyone can talk to me, but why don't I go ahead and introduce sort of Michael, and if John is there as well, so they have their full time. So I've known Michael, like I mentioned, for a couple of years now. He actually had reached out to me about an opportunity, and just by chance, one of the crazy things in the world, we were actually next door neighbors, and just never knew it. So that was a good time. But I think I've spoken to a lot of headhunters and recruiters over my the past couple of years, just because it's a hot field. And honestly, I think Michael and team are definitely the best. I think there's a lot of negative players in the space. If you think about like the Selby Jennings of the world, where they're just churning out roles and people are just there to try and hopefully fill a need. But I think they do serve a very valuable portion, in that as you move through your career in finance and you become more senior and hopefully become more expensive, it is much more about knowing the connections and sort of understanding what the roles are, and having a step in the door is super important. And as personally, we only hire now, pretty much even for us, through a recruiting service. We very rarely take anyone that just kind of like applies. So gonna pause there. I'm gonna stop sharing and sort of turn it over to Michael, and hopefully he's gonna take you guys through what he does, what the quant trading and sort of the PM and buy side and in some sell side roles are looking for. And he and John are going to sort of just, I think, hopefully give a great industry overview that you guys find useful. So I'll pause it there, and I'll turn it over to you, to Michael and John. Great to see you guys.
Max, that's fantastic, and it's great to come out. John and I have the opportunity to do this with a few university programs out there. So we love coming out to these groups. Max, really appreciate the invitation here. I'm just going to kind of take and run with what Max was saying there, and then get into a bit of a proper intro around my background, around our firm, and then get right into the really exciting stuff in terms of what's happening in the market. But when you think about the executive search headhunter business line, it's a lot more complicated than people realize. It's a lot more sophisticated, or it should be a lot more sophisticated than most people realize. The critical importance of being in a process through university with various institutions out there, absolutely crucial. Getting to know various firms out there early in your career, extremely important. And to Max's point, as you develop along, there's a lot of firms that do recruitment and hiring reasonably well, some much more sophisticated, most of which are really not, when you think about, and that this is no knock on respective firms, but there's understandably thousands upon thousands of people who are interested in joining the Bank of Americas of the world. And that's a lot to manage around when you're thinking about a very niche type of hiring need that they have. And where a firm like mine comes in is those who are extraordinarily talented, who are in phenomenal seats at well-known firms or lesser-known firms, for that matter, are not actively trolling the market for a new job. So folks like John and I do play a material role in advocating on behalf of a firm, on behalf of a prospect, and in trying to make a strategic match of somebody who's just not actively looking. And John and I turn up and we have a clever, interesting idea. So we'll spend more time talking about that. My firm, so we're called the Omerta Group, headquartered out of London, 20+ year executive search firm, serious platform with a big European presence, big Asia presence with a Hong Kong and Singapore office. I run the Americas business here out of New York. John Friedman on the line with us here runs our asset management alts business, but touches every part of the business with me, as he has a long headhunter track record for sorry to date you here a little bit, John, but I think it's a 2-decade-long track record across the business. Listen, we have a practice here, to get a bit more into the core of sitting with you all, that's really diversified, but a fundamental layer of quant that goes across all quadrants of our business. So we have a very serious asset management practice. When I say asset management, I'm talking the traditional asset managers like the PIMCOs of the world, all the way to the other side of the universe, where we're talking about the big pod shop hedge funds like the Millenniums of the world. Within that too, we cover endowments and foundations, we cover pension funds, we cover sovereign wealth funds here that operate in the States as well, much more significantly than people realize. So a massive asset management practice. Very important to this group here, what we call our global systematic markets business, and that spans across, think of the high frequency trading prop trading firms out there or quant funds out there. I'm giving some examples. We don't get a lot into client information publicly, but think of the Jane Streets or DRWs of the world. We spend a lot of time with firms like that, okay? We have a particularly big markets practice. When I say markets, I predominantly mean sell side trading and sales and structuring. That can go cross asset, that can go cross FIC, be it rates, FX, or into credit, certainly across the equities sleeve as well. Within our markets practice, I think we're also one of the select few proper executive search firms out there that are investing in the top of the first inning around the crypto and digital asset space, as well. So I think that should be part of our conversation here as well. I'll round it off with a big banking and private markets practice as well. Perhaps less relevant on one hand, becoming more relevant on the other hand, as you look at a number of private equity and private credit platforms that are meaningfully looking at building out their data science and quant analytics practices, et cetera. So we can't ignore that quadrant, even though the other three are probably a lot more applicable, et cetera. The last thing I'll say before I give a little bit of my background and John's background, and then really want to make this as open forum as possible, throw questions at us, nothing's off limits. When you think about the universe at the moment, part of this is probably gonna be stating the obvious because you guys are in this broad ecosystem. But if I go down the line and say hedge funds to high frequency prop shops, to banks, to alts, to asset managers, be it the traditional or the sovereign wealth funds and pension funds out there, to banks, to crypto space, every single lane that we operate in as a real serious global exec search firm, one of the select few that I think is particularly serious in these spaces, is hotter than perhaps over the last 10 years. That's both by immediate hiring needs, that's by hiring that we've done over the past 18 months, and that's by conversations that folks like John and I have with heads of or CEO of or founder of these respective clients, talking about the forward on the next 18 months that starts now. All right, so just wanted to give you that perspective where maybe I have a little bit of a unique view on the hiring universe. I, interestingly enough, grew up on the corporate side. So I ran recruitment for places like Citadel Securities globally. So I've got that high frequency prop type background, ran investment bank and trading and sales recruitment at places like UBS and Credit Suisse. So I've been on the inside. Now I sit in an executive search type of seat that has a lot of value in sitting in front of heads of respective businesses or HR and recruiting when we've literally been at the table. I've been at the table over a long career. And now we can transact on that from a strategic executive search type of perspective. That's a long-winded introduction there. John, perhaps if you want to give just a quick minute or so, and then we can dive into questions and giving you a view on this universe. Again, it has never been busier. It's never been more competitive. It's never been more clever. And I'm hoping we can offer up a lot of perspective here today.
Sure. Well, I'll obviously second everything that Michael said, and just add, I actually come out of not necessarily quant trading the way anybody thinks of it today, but started my career at Susquehanna, where I traded equity derivatives, and then got recruited by a recruiter. Here we are many years later. But as Michael pointed out, I mostly focused on the buy side, but I've done most everything. So that will include, maybe relevant to folks here, the stuff that Michael said. Plus, one segment that you didn't emphasize as much, Michael, is asset management quant. So think factor investing or other long-only systematic investing, which a lot of our clients participate in, as well as things that might be quant or model driven, like liability-driven investing or asset liability management-based investing, or solutions, portfolio construction investing, things like that.
Max, where should we take it? I mean, I'll just emphasize here, we are core across quant and data science and research and risk. And when you think about quant, think the tech and dev side of quant and prop trading firms, et cetera. You and I have had a lot of private conversation about the market and where various things are trending. I know you touched on a bit earlier in your intro around compensation. We're glad to talk about some of those things there. But what's most useful to this gang? We have a real wide perspective. We can go really wide and really deep. I'll turn it to you guys, and you help steer us.
Yeah, for sure. I mean,
Max, could I ask a question?
yeah, by all means, anyone, please go.
Yeah, you said you were poor across quant. Now that assumes, since you said the market was so hot, that's not true outside of Omerta.
Is it true outside of Omerta?
Are you saying in Omerta you were poor in quant, or you're
No,
saying
I
that
said
the
no,
industry
no,
is?
no, John. Let me clarify there. I said core, not poor. Core across quant. So
Oh, well, okay.
yeah.
Well, that's an entirely different.
That's a major difference there.
That's as reassuring as everything else you said today, which has been a mouthful in many, many quarters.
Otherwise, you guys would have cut me off if we were poor in quant.
I would have dropped.
Made
Would
no
have dropped
sense.
off the video. Well, why don't you? I mean, I guess. Well, first, is there anyone in the class that immediately has a question? If not, you can kind of steer it. Can't even see. Well, so I mean, I guess first, Michael, what do you think at the more entry level? So maybe not this like the PMs that have track records. What are the skill sets you think, and sort of like the techniques and the knowledge that are sort of being most prized right now? Especially like you said, super hot market.
Yeah.
What is kind of like the things to have, the languages to know, the examples. Where do you think that is right now?
Yeah, John, why don't I pivot that over to you, and then I'll round it off with kind of perspectives on how to go about that, and we'll round it off that way.
So if we think about the skill sets that are kind of it, I'll say one thing that's really changed is historically, I think there was an experience set that people look for where I've built this and I run that and I understand the business, or maybe, or perhaps I understand how to build and run a business, though I may not myself be the trader or the coder or whatever. I think nowadays, and it's probably driven more by the mindset of very hands-on places like the aforementioned prop trading firms, particularly the Towers and Jane Streets and HRTs of the world, but also I think Citadel and places like that, where they would much rather have the person who can code something him or herself or research something him or herself, to call model building, coding, or development otherwise. And that oftentimes you'll see a person who has been responsible for building a business, has built a really successful business, be turned down. Either we won't even meet that person, or we've met that person, but we're going to reject that person in favor of a much less experienced person, but who's building it themselves today, hands on the keyboard. So I would say that, when I think about what's the most valuable skill set, at least right now, whether that'll remain the case going forward, I tend to think it'll be a core skill set going forward, but certainly is the ability to code, research, develop models, strategies, etc. Most popular coding languages today are either, call it C++ on usually the bank side, but big industrial places, because it's a big industrial language. Otherwise, Python probably. I would certainly argue that R is still pretty valuable, in part in conjunction with Python, obviously. But outside of that, it's the normal stuff you might think of. I don't know, VBA, SQL, Systematica, LaTeX. They're all useful, but I don't think anybody's out there saying, "Hey, I need a VBA, LaTeX, blah 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 coder." They're saying, "I need a Python or a C++ coder," because most shops are one or the other, particularly on the buy side, and then occasionally get firms that are both. I think if you're really fluent in both Python and C++, that's really highly valuable, because a lot of firms, those two coding bodies don't talk to each other.
How on that note, if we was to ask, I've personally been on, and we also do some interviews, especially for, again, maybe not the most senior or the people that have kind of been in the industry for 10 years, but people coming out of school. We've seen kind of like a increasingly or an increasing complexity, I think, in some of the interviews, especially on that technical side. I mean, if you're going to a first round at, like you said, like a Tower researcher or a cubist, in the world, so which is, how like complicated can you expect that to be? What does that, look like these days?
Let me qualify the answer to that question with one really important distinction. We we are constantly told by the interviewer or hiring manager or whomever, this is really basic math. I mean, any PhD or master's student should be able to get it. It's intuitive, and somehow 90% of the PhDs or math masters and undergrads we put in for physics will fail, right? So something's going on there where there's a disconnect. What I would tell you is that market intuition is highly valued by almost every hiring manager we have, no matter how quantitative. So I think what'll often happen is say, why don't you price this option? And it'll start out as something really basic. And then they start throwing a lot of bells and whistles to the feature set. And it starts getting much more complicated in terms of potential payouts. And all of a sudden you're thinking about a lot of statistical variance in that product, right? And so I don't know, is that fair to say that it should be market intuition? I'm not sure. The math itself doesn't sound like it's terribly complicated, but I'll repeat again, somehow a lot of really smart people who've studied math and physics are often not passing those tests. What I will say is they tend to fall into two broad categories though. So the first is the obvious stochastic calculus of some sort, right? And the second being pure statistics. So, usually things are falling into one of those two categories. The other thing that people will get asked a lot, of course, are brain teasers. Some firms like them, some firms don't. There's obviously an increasing body of articles about how anyone who's bothering you with brain teasers is not someone you should work for, but since most of the best firms use them, take that with a grain of salt. But yeah, no, so I would say that in general, think probably two or three things. Try and be concrete in real world. Always frame your answer in terms of what you have and have not studied. Because oftentimes what you can do is give the wrong answer, but show you know how to think about something and come out a winner in the end by someone saying, wow, this guy or gal has never even studied this. And they're already showing that they know how to think through it and learn it. I'm not going to sit here and tell you that at the quant strat sitting in a hedge fund on the desk helping the PM level, there's a ton of leeway for that. But if there's a chance to turn an I don't know into a victory, that's the way. And then, finally, to that point, always make sure you're expressing how you're getting through a problem. And just think about when you were younger, middle school, high school, secondary school, whichever your program might have been per country, when you were able to show all the steps you took to get to the answer, oftentimes you could get partial credit on a test when you didn't get the final answer correct. If you don't show that, your teacher is just marking you incorrect. Same thing in an interview, right? That sometimes you'll get brownie points for that as well.
Yeah, if I can just comment on the top of that, the brain teaser topic number one is an ongoing challenge for guys like John and I. We challenge respective firms on it in a variety of ways, and then it's hard to argue with a Jane Street, for example, who's a $10 billion platform who employs that across all layers of hiring, from the most entry level to the most senior level hiring. So that's just one example. Two, just to kind of add to what John had said, is if you look at this side of the universe, what they are observing is, are you making it up? Are you trying to manage your way through a conversation where perhaps you think you are actually going to outsmart or outfox somebody in that interview process, when you're in all likelihood talking to a PhD or a pro who's been doing this for 5, 10, 15 years? Jane Street, I'm just using them as an example, one of the co-founders who happened to have written multiple books, extraordinarily well known in the business. And he has said to John and I plainly, as we've sat in his office countless hours, said, listen, we are not going to be outsmarted by anybody that we hire. That's not arrogance. That's not pretending we're something that we're not. We're just not going to be. What we want to hear and what we want to observe is, and I'm going to track it back to your first slide, Max, where I think you're coming to in a couple of weeks, loss management. Are you trying to manage around a conversation to force an answer that then becomes extremely clumsy and becomes extremely risky, and they cannot put you on a book or put you on a call or put you in a model and entrust you with that? So to John's point, let's just emphasize if you have command of topic, command of answer, and are able to iterate through that and demonstrate steps, that's critically important. The last thing I'll say, and I do think folks struggle with this, and it's so elementary. Prep is actually everything. That's prep for the interview. Guys like John and I are very useful with that. That's prep for, you don't have to be the master of it. I'm just going to keep using Jane Street as the example, just for illustrative purposes. You don't have to be the Jane Street expert, but you do have to turn up to Jane Street and have a view. You have to demonstrate that you've taken a view, you appreciate their place in the broader ecosystem, right? And the more that you demonstrate that also gives you that partial credit or leading you towards the right outcome. John, you wanted to add something.
Yeah, I would say that makes me think. So when I think about Jane Street and Optiver, I think maybe a little less so Citadel, but those sorts of firms, it's really important, not just that you show you're a master or whatever, as Michael pointed out, but of riding a bicycle or a motorcycle or a car. Those sorts of firms want to see, and this will get back to my original point about they'd rather have that coder with more of that skill set, maybe less markets experience or seniority. They want to know that you know how to build the car, the bike, or the motorcycle. It's really critically important with firms like that, and showing them not just that I can come up with the answer. Again, we keep coming back to this, but go through the steps because they need to see that level of mechanical knowledge of whatever it is they're asking about.
Nimble thinking, critical questions, which are applied throughout a process like that, are going to show extraordinarily well. They are the differentiators at this level, yes, at all levels when you're talking about the prop / big broad quant universe.
Max, could I just do a point here that according to the official rules, the students can leave at 10 till. So if any of you guys need to leave, feel free. Otherwise, I trust we can hang out for a few more minutes.
Yeah, and Michael, John, if you guys had a couple of minutes, I mean, I think
Glad to.
the first thing let me ask while we still have most everyone. I mean, I think money is obviously big on people's mind and compensation. And I think especially I don't know when you guys were joined on, but I mean most everyone here. We have a couple undergrads, but a lot of PhD students, a lot of master students who have in some sense forsaken potential income to pursue this deeper knowledge. I mean, where I think that compensation right now, at least at the base level, is probably the highest it's ever been. I mean, just I don't know how many everyone in the class is seeing, but at the sell side, the analyst and associate salaries are probably the highest they are the highest they've ever been. I mean, I think Goldman just extended the both banking and markets analyst starting salaries. That's just base for someone out of undergrad to I think 110 or 120 outside of even like the stub that you get in the first year and anything incentive comp after. B of A, we did the same. I think it's like 110. I think Daniel might have mentioned I think very earlier about like banking in some of the private equity groups. Also, like those are all going higher. And, in terms of a career, that kind of base salary certainty not only propagates at the starting levels, but that will likely eventually feed to the higher levels, because you can't have a first year associate, earning the same thing as, a first year or second year VP just in salary. So, I think there is from a guaranteed income state, definitely, at least from what I've seen, it's probably the best time to get in that you could. And then obviously, variable compensation is, has some variability to it, but if you are good and you're talented, you do get rewarded. So, what do you guys see, obviously, as, the experts, that maybe you could kind of give a little light to this group on, like, what are expectations? How do you see it versus, historically? And, is it an attractive field to get into now versus tech versus, something else, which may have been a little higher on the base salary side previously?
Absolutely. Great question. It's naturally a hot topic for a lot of different reasons. John, I'll ask you to kind of jump right in here in a second, but it's also indicative, Max, of 5 years ago, you had a massive run of the sell side out to pure tech, out to the Googles and Facebooks and Ubers of the world, et cetera. You are seeing a rotation back. Pardon me, honey. Sorry, guys. When we're at home, the young ones invariably interrupt. But you're seeing and John and I are involved in this a lot of clients on the sell and buy side asking for that retrade back from pure tech into this universe. That's only further complicating this topic, which is why I raise it. John, why don't you give some perspective on the comp numbers and the variability, et cetera,
Sure,
and then
sure.
I'll get rounded off.
And I would only qualify the trade or rotation back to finance from tech by saying, I don't feel like we're seeing as much of the banks pushing for that hiring. I think they're open to it, but not pushing as much for it. I think what it tends to be is firms that would consider themselves, fair or not, technology firms, rather than finance firms. Again, we come back to those prop firms you mentioned, HRT, Jane, Tower, whomever, that are going to look to things like an AI PhD working in Google DeepMind or Apple AI or places like that. That's considered to be very attractive for them. I do think that a lot of people have found, just as a generation ago, bankers found when they moved out of M&A into corporate development in companies and realized there's not that much deal flow and it's boring, that a lot of, call it straightforward coders who went to places like Apple, Facebook, et cetera, find that it's not as mission critical as they felt like it was on the sell side or the hedge fund they were at. And some of those people are saying, I miss that environment, that camaraderie of being on a trading desk and having a PM needing what I'm doing or a trader needing what I'm doing right now. So we are seeing quite a bit of that. But comp-wise, I would say, I mean, it's pretty fascinating to your point, Max. I think a lot of the programs were historically masters and PhD candidates were often hired at a discount to MBA type associates are now at a premium or the same. And I would say that can range anywhere from 200 to sometimes 300 plus for a first year, where it used to be, I think, in the hundreds if you were lucky. And the promotion scale for PhD particularly, but sometimes master's candidates as well, tended to be lower. There's so much pressure now to hire these people from the banks that have trained them into prop trading, hedge fund, et cetera. Again, the comp scale getting promoted and or your total comp increased each year is going up quite a bit. So I would say that it's really, to your point, Max, highest that it's ever been. And we're seeing the Citadels of the world, for instance, hiring some of these people sometimes for $400, $500, $1 million a year, a couple of years in, which is unheard of. So it's, they definitely perceive the competition as real and they're paying up accordingly.
Max, I was just going to add something, Max, here is that there's also, again, back to my point about being prepared around who you're spending time with or who you're considering, there's a lot of layers to that. How crowded is that respective group? Are you number 1, 2, or 3? Or are you number 30, 40, or 50? That's a serious part of the overall calculus there. I think one point to note here and dispel maybe some myths, the trade out from the sell side to the prop or big asset management universe is ordinarily not the first year get rich scheme. Okay, it's actually ordinarily flat or flat plus just a little bit. What the difference is, you now have an opportunity set to be part of running a strategy, running a book of business, being a part of a PM who's been paid extraordinarily well and is responsible for all expenses and paying staff, et cetera. The acceleration over that 3 to 5 year curve is what's most attractive and why so many folks do make that pivot. But it's important to note when, and I'll use a Jane Street example, when they turn up and say, I'm going to hire somebody from Bank of America, and the Bank of America prospect says, well, that's I wasn't quite expecting those relatively flat offer terms. I said, well, you don't do what we do today, but we are giving you that opportunity tomorrow. And if you do it particularly well on that 2, 3, 5 year forward, you're going to accelerate your career compensation, unlike where you're at today, in all likelihood, by some multiple.
Yeah, I agree. I mean, I think also a part of it is, some of the shift also from, the 5 year ago exodus, which we definitely saw, as well as kind of like the labor market as it is now. I mean, a lot of places, especially like the big organizations that would have historically been less nimble, maybe a little top heavy, a little old school. I mean, I think they're all becoming much more meritocratic for sure. And, I think it really is, for the first time, it's very exciting for everybody that, is about to finish their degree or finish the program. It really is kind of like the worker's choice. And I think there is an opportunity for you to, almost have it all, whereas you get the money that maybe you're looking for, the location, or in this case, the flexible environment maybe, and as well sort of prioritize some of the things that matter to you, whether you want the company to be super ESG or, you have a particular working style or you prefer a smaller group. Like, those are all things that I think used to be a little bit, you kind of take it on the chin, but now, I mean, I think employers are pretty much bending over to try and meet those needs. So it is really exciting time, for you guys.
Could I ask a question of Michael and John? 2 questions, actually. If the class has questions directed to you guys, can we send those to Max, and Max could send them to you, and maybe you could address some questions from the class?
John, glad you asked. Absolutely was going to offer that in the end, 100%. We love coming out to groups like this and wherever, however we can be helpful with perspective.
Well, that
however
brings up
possible.
my second question is, would you be willing to participate in a panel we have toward the end of the semester?
100%.
Asked you while you're in
Wonderful.
person. You can't say no.
Yeah, listen,
Now,
yeah,
what
this-
about John? I
That's
didn't hear John
face-to-face.
volunteering.
I put the thumbs up.
we're flattered by these invitations. We love coming out in front of super smart groups like this, and if we can offer up some degree of perspective on what's going out there in the universe, where we hope it's useful. I'm hypersensitive to time, so maybe I'll close on this, Max and John, and to the group. One, thanks a lot for having us. My last bit of just perspective, and I've alluded to it a few times. Have a view, right? Do the prep. How do you differentiate yourself, and how do you come in commanding some form of a topic, displaying that, articulating that in a very thoughtful way? Be nimble, be rangy. Don't be so linear or so limited, because that can cut you out of conversations at a respective firm. Jane Street might say, maybe not for this, but if they were a little more rangy and a little bit more lateral thinking, we could have thought about them for other sides of the platform. Give yourself that optionality. But be prepared. Differentiate yourself. It's a fantastic time in the universe to be joining these business areas, and the quant space is not going away. It's only getting hotter. It's only getting more competitive. So again, Max, John, we really appreciate and super flattered by
Thank
the
you very
invitation.
much.
No, thank you guys.
Thank you a lot. Really enjoyed it.
So
Again, seconding everything that Michael said. Let me just have one super half sentence. Max, you just mentioned ESG in passing. We have a number of requests from clients to find quant ESG research and other professionals. If that is of interest to people, I would urge you to pursue it, because it's only going to increase in demand.
yeah, and honestly, again, no, this will be my half sentence. So we just, I mean, part of our scope now is like to focus on carbon, and like, you know, honestly, the world around like the EUA credits, which is like the carbon capture system in Europe, California carbon allowance. I mean, those things are now just, I mean, exploding at a rate that, and I think a little bit more possibly a sustainable rate than like what crypto did, you know, in the last year and a half. And you're getting a lot of real money investments. If that's of any interest to you, by all means, I mean, I think that is going to be the hot field in all forms for the, you know, a very long time. So let me just quickly share screen again, just to wrap out. And again, I appreciate everyone. You know, I forgot how long sometimes syllabus week takes in the first day. So thank you to everyone. And please, if you have any questions that we didn't get to, you know, please feel free to shoot them to me, and I'll pass them on to Michael and John. Just quickly about next time. So, you know, hopefully we'll be in person. I am here in Houston, but I know for unforeseen circumstances cannot get to be in person. So hopefully we'll be in person. There's some docs on the, I think in the shared drive about.
They're put in the files directory under FIC, F-I-C-C, and there are, anyway, read the first three of the readings that are in there, 1.1, 1.2, and 2.1.
Perfect. Yeah. So go over that. It's a, you know, an interesting introduction to thinking about systematic risk. And then like everyone, you know, a lot of people had mentioned their own trading and coming up with their own strategies. It's interesting to see like what, you know, maybe the, you know, what some of the institutions are doing, what the professional space is in the risk premia and the systematic, you know, trading side is at the bank and fund level. Like I mentioned, we'll have Kranti Gade. He'll be joining in the second half, you know, to give a really hopefully hopefully live up to Michael and John's precedent and do a good job going over, you know, what he sees, and again, that strategy development. And then lastly, you know, obviously it's somewhat of an infrequent class, but, you know, by all means, please feel free to text me, email me at either of the emails. And like I said, I mean, for most of the classes, I will be in person, and I will be around in Houston for, you know, two big chunks. I'm here for the next week and a half as well. And then in October, I'll be there from the 10th through the 29th. You know, if anyone ever wants to meet or you have any questions, I'm happy to do that, make it work. And, you know, to try and go over things as best helps you guys. So I'll post these, and, you know, the slides will be available. I know we didn't get to everything, you know, if there's any interest in reviewing. And again, thanks for joining. This was really great. Thanks, Michael and John and Dr. Doberman. We appreciate the opportunity.
Have a great day, everyone. Take care.
Thank you so much.
It was really great. And thank you all students for who stuck around. And thank you, Max, for a beautiful service.
It's great, guys. Take it easy.